Okay, folks, welcome to Sunday Night Futures Live. We have a very active market here at the open. Wow, big things happening. First, let's go to a tweet from over the weekend. Actually, I don't have the tweet, but this is I never heard of this before. This is uh, basically a gold, PAX gold relative to Tether, and it's skyrocketed up over the weekend. It appears to be pulling back at current dramatically, and you're seeing a big rally in gold and silver, but NQ, the NASDAQ 100, is dropping very rapidly. Now, luckily, we have short positions on, and so this is okay. Actually, I have one position that is not short. I made a mistake on, and that's probably going to hurt tomorrow. We have some heavy selling here. Now, we may get a counter trend rally overnight. What had happened is that we had the tariffs that were placed on Canada, China, and Mexico, and I believe now even the Europeans perhaps as well. And there was retaliation over the weekend. I looked at the retaliation. It didn't appear to hit tech. It didn't appear to hit aerospace, but you never know. Very heavy selling pressure here at the open. Let's say hello to folks. Corey, welcome. RL, welcome. Mr. Sean, welcome. Okay. Let's take a look at gold. Oh, no, gold's flat, reversed. How about silver? Silver now up only a quarter percentage point. Okay. So a bit of a bull trap there on precious metals. Let's head back over to equities and take a look at the S&P 500, the E-minis. Come on, mouse. Oh, E-minis down 1.8%. Let's go back to the NQ. Pairing losses here a little bit. Now down by 2.5%. The Russell 2000, wow, Russell 2000 down 3.24%. Wow. Checking in with the mid caps. Mid caps down 2.2%. The Dow Jones Industrial Average down 1.11%. All right, we have a whole bunch of folks in now. Talon, welcome. Paul, welcome. William. Tim, welcome. TF Hatter, hello. Boom. Okay. So at the open here, we have an explosive open. Lots of damage done. Not your typical Sunday night, that's for sure. Let's check back in with gold. I wanted to sell call contracts. We've sold 2 tranches of the put contracts. This is a 13 delta, 14 delta. I want to go as far out of the money as possible, collect as much premium as possible. I'll tell you right now, if we go through the highs of the session at current, gold's going to rip. Oh, duh. Okay. We have an order out. I'm going to sell 10 contracts of gold calls to offset our put position. Because we did leave the week last week pretty overbought relative to the third standard deviation Bollinger Band. But that being said, I would rather be skewed long of gold rather than too heavily neutral or bearish against gold. I think the path of least resistance is clear, it's defined, it is up. Let's go back. I hate to bore people here, so we'll move on. I want to check back in with silver. We have a pretty large position in silver and in gold. We're doing well with it. Silver doing very nicely here at the open. No new weekly higher highs as of yet. I'm not going to sell calls on silver because silver is like a coiled spring. It's in a very long base. And when it blows out of that base, it's going to give you a rip your face off rally that you haven't seen. Relative to gold, silver is very, very inexpensive. It has not rallied like gold. So I would rather be long of silver with no hedge whatsoever. Let's take a look at a weekly view. You can see you have a Bollinger Band squeeze setting up here, Bollinger Bands in orange with your Keltner channels in beige, tan. Either way, what this is implying is that you're going to get an explosive move in silver. I do not want to be on the opposite side of this trade once this thing blows out. And I think it's going to blow out to the upside. Let's check in with the dollar. The dollar closed very strong last week. You can see by this bullish reversal bar on the week. Let's see how we opened up on the session. Oh, they're exploding the dollar up. Wow. Wow. To think that gold and silver are rallying with the dollar up this big, the dollar's up 0.85%. That's a huge move. It's a huge move. What am I looking to do? Oh, 10-year yield. Let's see what the yields are doing. Yields are up fractionally. They're off their high. Let's check in with oil. Oil ripping up here. Oil up 2.43%. Wow. Wow. Big, big move. Let's check in with Natty Gas. Natural, oh my God. Natural gas up 7.5%. That's mind-boggling. Granted, yes, it's very, very volatile, but this is bananas. Holy cow. We have Boyle, which is going to expire. We have a put spread there, bullish bet in 12 days. So, wow. Amazing. Wow. What a night. All right. So the NASDAQ is still down about 2.5%. Boy, oh boy, what a mess. RL, usually seasonality drops as well. What product, RL? What are you referencing? I think you may be referencing gold. Gold does have a seasonality issue this time of year. Futures looking bad, and Canada's saying won't sell American beer. Yeah. Okay. All right. Let's stick with the I think the story here is not so much equities. I think it's in commodities. Cattle. We have the lowest herd in the United States since, I think it's 1962. Think about it. Our population has probably doubled since then, and our cattle herd is the lowest since 1962. Bitcoin, Bitcoin down $4,000 or 4%. I don't think you could rule out some sort of overnight Fed intervention here if this thing gets out of control. Soybean oil futures, of which we are positioned long, they are up. Soybeans up 0.25%. Not much happening here. Let's check out the weekly chart. Bollinger Band squeeze setting up on soybeans, getting ready for an explosive move here. Wheat futures looking good. They closed out the week last week above the 21-period EMA for the first time since November, the week of November the 4th. Copper down. Palladium down. Platinum down. Let's check back in with gold. I'm not going to move that offer. I'm not going to lower it. I didn't do it on Friday. I'm not going to do it today because I have a feeling I'm going to need that premium because this could gap up a lot higher. Volatility is up just under 12%. 10-year yield remains up. Okay. A more interesting open here than what we're normally used to. Very, very interesting stuff. I keep thinking, you know what I haven't gone over is Euro Yen. I don't think that's what I was looking for. That's what I'm looking for. Japanese yen opening down weak today. Canadian dollar getting destroyed. I got to tell you, I think that this is a buy. We went over this on Thursday night. Gold weakening up. I'm not going to get filled. All right, let's go back to Canadian dollar. I know we're at historical support here on the Canadian dollar. 65.23 is a support level. Gold is falling apart right now. I would nibble on the Canadian dollar, but it's not at support yet. I'm not going to get filled. Okay. Be what it be. Okay. Enough of this. So Canadian dollar, we're going to be looking to buy the Canadian dollar at around, where is it? 67.36. We're right there, aren't we? That's one support level. If they kill it, we'll buy some. It's not at support just yet, so therefore we do not buy. Okay. Let's talk about, well, the dollar. I guess this is a good chart. It's appropriate. The dollar, very strong at current, the dollar in blue, but this is a chart relative to Trump term 1. And it's very, very consistent, the US dollar. And as a reminder, during his presidency, the dollar lost a good amount of its buying power. So the strength in the US dollar right now may be short-lived if history were to repeat itself or even rhyme. But it's a pretty bearish downtrend. So I think that these sell-offs in these currencies, the peso, the Canadian dollar, we went over this on Thursday night. We weren't at support, but I think that this sell-off is going to be a buy the news event for these names. Now, looking at economic data coming out this coming week, S&P 500 manufacturing PMI, construction spending, ISM manufacturing. So we have a lot of economic data coming out tomorrow. Job openings, always important. Factory orders. It's an employment week. We get ADP coming out on Wednesday. Then we get S&P U.S. Services PMI. Any read above 50 is a sign of expansion. Any read below is a sign of contraction. Now, ISM manufacturing, they're expecting us to cross back over into expansion. If we don't, you may see a sell-off in bond yields. And especially if you see weakness in services, you may see a sell-off in bond yields. Thursday, initial jobless claims. We get that every week. We have a lot of Fed heads coming out this week. And of course, we get on Friday the pimp Mac Daddy of all economic data. That is non-farm payrolls. And of course, we get our bogus unemployment rate, which is not really real. That is an invention that was created in the 90s with the creation of the U3 report out of the Bureau of Labor and Statistics. If you want a real read on real unemployment, you got to go to the U6 report out of the Bureau of Labor and Statistics, and that is your real unemployment at 7.5%. The U3 report, those people not looking for employment are dropped out of it. They no longer get counted in. They don't exist, but they're alive and they're not working. Whereas the 6 report counts them. Very convenient for the government. Earnings this week, big one, a lot more exposure to the consumer. On Monday, Palantir comes out. I've never tracked one of their earnings reports, Rambus reports. That's a very volatile stock. Rambus is the stock I created, the contrarian, extreme, overbought, oversold trading methodology. That was the first stock I applied it to. PayPal. They report pre-market. Spotify pre-market. Pfizer. That was on our list of stocks to trade this week. If I'm going to trade it, it'll be to the short side. PepsiCo. We get Ferrari race comes out on Tuesday morning. That should be an interesting one. After the close on Tuesday, semis, AMD, we get Alphabet, Chipotle, Amgen, Juniper Networks. Wednesday, pre-market, Uber, Disney, Novo Nordisk. After the bell, Ford, Qualcomm, ARM Holdings, lots of tech this week. Viking Therapeutics, O'Reilly Auto Parts, good company. Impinj, I own that. We're not doing well with it. Lilly, Robolox, ConocoPhillips, Energy, Hershey's, Peloton. Lots of consumer names this coming week. Yum, Philip Morris, Amazon on Thursday, Cloudflare, Affirm, Microchip, Pinterest. And on Friday, we get the weed stocks, Canopy. SIBO comes out. It's going to be a big week. So buckle up. Okay, so this chart here is a chart of debt, which is maturing now. Between now and 2026, government debt is set to roll over, and it's a ginormous amount of debt, short-term debt, that needs to either A, we need to cut spending, or B, they need to roll this over. The problem is that this debt was cheap money. The new debt is going to be on more expensive money. They're going to have to pay more for an interest rate because treasuries have gone up higher. What does that mean for I'm completely out of here. What does it mean for our debt expense? Unless they cut spending, our federal interest payments are going to continue to skyrocket, really unsustainable at its current pace. If they have to roll this debt up more, this is going to go parabolic. And you could argue that it already has gone parabolic. Something needs to give. Now, in terms of valuations of the market, we have the Shiller PE ratio at 38. Keep in mind, we are not much changed from where we were 2 weeks ago on the Shiller PE ratio. Think about it. You had all the earnings that have come out, the banks, big tech. What's happened to the rearview mirror picture of valuations? They haven't moved. We're not growing into the multiple that this market is sporting. Therefore, the market remains very expensive and very, very vulnerable. And in fact, market valuations are at the highest levels in histories when taking into account multiple methodologies, combining trailing PE, this is trailing PE, with forward PE, the CAPE ratio, price to book, EBITDA, Q ratio, market cap to GDP, that's the Buffett indicator. We are at all-time record highs on valuations in the equity market. And what else is going on? We have the yield curve, which is in the red zone, signaling Be very, very careful in this market. Be very, very careful. And you're seeing that play out this evening. Canadian dollar catching a bid. NASDAQ catching a bid, still down 2.23%. Excuse me, 2.32%. And last week, U.S. Treasury yields, the Treasury yield on Friday on the news of tariffs closed up. Now, granted, this is not overly bullish. You have topping action here. However, you have support below. We are putting in lower highs and lower lows. And the weekly chart, actually, we can go with the monthly chart because the month is in the books now. We had a bearish reversal on the month last month. So maybe what we're seeing pre-market here is a bit of a head fake on yields moving up higher, and perhaps we'll get a pullback. Just as we got a bull trap on gold this evening, the same may happen with bonds and bond yields. We're not seeing that at current. Let's check in with gold. Gold is now negative. I kind of figured that was going to happen. Now, last week, you saw hedge funds dumped at the fastest pace since last July. Remember what happened last July, late last July and early August. If you go back and you bring up the VIX, this was July and August, I should say August. Let's go to a weekly view to get a better feel. Right here, late July, early August, you had volatility spike up. Why? That's because of the Japanese central bank raising rates for the first time in like 18 years. And the yen moved up higher, threatening the yen carry trade. That came off, but the yen is creeping back up as of last week. Right now it's down, but I don't think that's going to last. So smart money is taking money off the table, and they don't appear to be shorting. And this could be dated by about a month. The put to call ratio, basically the number of puts that are being purchased relative to calls. Puts to call ratio declined to the second lowest since the 2020 March crash. As a result, its 10-day moving average fell to its lowest since August of 2019. The level of bullishness has rarely been greater. Almost nobody is hedged against a market pullback. Well, we are. So the non-contrarian mind would think that this is fairly bullish for the market, that you don't have a lot of bearishness out there. Well, you have a lot of complacency in the market. And if the hedge funds are lightening up on longs, those that are going to be shorting, they're going to be taking an opportunity to put some of that cash to work because they need to provide alpha. And if they don't see upside appreciation moving forward in the equity markets, they're going to try to create downside volatility, which is what you're seeing right now. Let's check in again with equities. This is the NQ. They're not going to film me. Bastards. Bastards. Okay. Sorry. Family-friendly show. they're going to hammer gold. Let's check in with the US dollar. This is the reason why you're seeing gold sell off. Besides the technicals, dollar is very, very strong. It's only gained since we last went over it. It's up nearly a percentage point. Rarely do you see this type of price action on a Sunday night on the US dollar, but we are getting it tonight. Euro, I don't think I went over the euro. Euro's getting smacked. Holy cow. Down 1.29%. Wow. And it's going lower. It's coming down here. Right to about 1.02, 1.02252. Yeah, talent. Natural gas rocking it tonight. Now up 8.28%. I don't know if I can get Ethereum futures here. Let me see. Yeah, I can. Oh, this is grayscale. Where's my futures? I don't think I can get it. I can get Ether futures. They're up. Very, very nice. Good looking chart. Okay. Let's do some chart requests. I had to go to the folks. If you're not in our forum, that means you can't do chart requests. So all you need to do, head on over and enter. Yeah, I feel your pain, pal. I'll be dollar cost averaging in automatically tomorrow. So just enter your symbols here. XOM. Baba. This may be a good opportunity to buy Baba on any pullback. Tesla. Lilly. And if you're not currently a part of the forum, head on over, put your symbols in there. And if we have time, we will go over them. No credit card required. All right, let's get to it. Folks, this is going to be brought to you by our friends over at TrendSpider, automated technical analysis. Don't leave home without it. Link below to get a bare minimum of 35% off of your membership with them. And I give it away free to our silver and gold level members. If you watch this on Twitter, the link is above. All right. XOM reported on Friday. I did not look at the earnings report. I have no idea how they did. They're going to make me only when I'm live. There we go. Oh, not good. No bueno. No bueno. Now, oil is moving up in the current session. So you may get a bid here on XOM. This is a weekly chart. I mean, we really need to close above 109 per share because right now this is a bear market. Not a bear market. Let me rephrase. It's a stock that is under a lot of pressure. We are putting in lower highs and lower lows. And if we break and close down below 96.45, we will then be in a bear market on XOM. Now, with oil prices moving up and assuming that they stay up, let's do this. What's the correlation between oil? There's not a big correlation. It's actually a negative correlation at current. And that's on a weekly time frame, no less. On a monthly time frame, uh, historically, I mean, very weak correlation. Usually they're pretty tightly correlated. So let's see if stronger prices help out at all here. But I would be very, very wary of any rally. Just be aware that you have resistance right at 109 per share. You need to close above that mark to make you safe. Daily chart. Horrible price action on Friday. They did report earnings, so apparently the street did not like their numbers. Whether the tariffs had anything to do with it, I don't know. Let's check the intraday price action. They reported in the morning. We had tariff announcement came out later in the afternoon. It was earnings that took them down. You had a counter trend rally. Then the announcement of tariffs knocked oil or XOM down. Let's check out seasonality. February is not a good month. It's one of the worst months out of the year. It's actually the second worst month, but it is the month once you see a big sell off to start buying because March, April, very, very strong months. Baba, weekly view. I was fairly bullish on Baba a couple of weeks ago, rightly so. And I would not buy where we closed on Friday. I would be looking to buy Baba right down here on a retest of support. And that is weekly support. And we are good to go. Now, seasonality, this is only 10 years worth of data. This is not a great time to be an owner of Alibaba shares. That all changes if we get a big sell-off in March and you ride the rally, multi-month, rising sequential seasonality performance in Baba ending in August. So I'm thinking that we may get some good performance out of Alibaba over the course of the next 6 to 8 months. But you may get some volatility in between. Hey, Jody, welcome. You are welcome, Sean. Very welcome. Tesla. You know, it's consolidating. It's consolidating. It's had a heck of a run up here. You are getting a Bollinger Band squeeze set up on a daily time frame. The problem is that you're trading right at or just below the 20-day moving average. That's not where you want to be when you have a Bollinger Band squeeze. You want to be above the moving averages. You want your moving averages stacked, meaning shorter duration moving averages, 2, 5, 10, 20, 50, 100, 200, all moving up. And that's under a little bit of pressure right now, putting a question mark next to whether or not we break down or we break out on this Bollinger Band squeeze. So right now, I wouldn't do anything. I would wait to see how this fires off. Lily? Weekly chart? So Lily is actually looking pretty good. I drew this line several weeks ago, and we broke out last week. And you could argue that we broke out the week prior. Last week was a retest. I kind of like Lily here. I don't know whether or not they reported earnings. Let's check out seasonality. February, not a great month. March gets much better. So just be forewarned about seasonality. This goes back 50 years. Sometimes if we bring this data a little bit closer, let's say to January of, let's use more data than that, 13 years worth of data. Yeah, February is still very weak, but March is a very good month for Lilly. So we may get some chop, we may get some consolidation, may even close up. It's not 100% guaranteed it's going to close down in the month, but Lilly firming up here, looking pretty strong. Oops. Let's go to the daily chart. On Friday, we got a bearish reversal bar on Lilly. How are we doing on? Yeah, we broke support. No trend lines. Fibonacci retracement, potential support down at 795.58. This is the automated Fibonacci's. If you don't know how to do them, TrendSpider, you click a button. I think somebody put another one in the forum. Let me check, make sure I got everybody. Yang. This is a short China ETF, I think. Yeah. All right. So my knee-jerk reaction was to say no to this. And it's still probably more of a no than a yes to buy this, because we are in a downtrend. We are not at support. And China, frankly, their stock market is probably going to move up due to the fact that they have so much liquidity being pumped into the market. We'll come back to this. Let me give me a moment. I want to check out the FXI. Yeah, you see, you have the Chinese stock market, which is breaking out. You know, if you want to take a look at a monthly view, do a real high level view. I mean, I don't want to short this. And when you've pumped as much liquidity as they have into their stock market and their economy, and they're probably going to do more, I don't know whether or not I would want to short this chart. In fact, I know I don't. I want to buy it although I can't stand buying mainland China stocks because of many reasons. So let's go back to Yang. Do we have a short-term trade? Here's the monthly chart. No. We broke down below monthly support in September. We've just been trading sideways, and we closed out the month of January with a bearish reversal bar, weekly view. I think this goes lower. As much as it kills me, I'd rather be a bull on China right now than a bear. As much as I don't like their accounting practices, the lack of transparency, communism. I got to. I'm looking at the charts, and the charts are saying get long of China on any pullback. It's probably going up higher. That's my take on it. And let's check back in. We have a little bit of extra time. Tim, you are very welcome. Oh, NVIDIA for Jody. Yeah, you're going to want to avoid this. If we rally this week, they'll retest 129, 130, and then the test is at the top. Do we break out, or is this just a check back? Long's trying to keep the dream alive that we're going to rally and go to $1 million a share. For all I know, we're going to. But right now, this is a massive gap down last week, and you have a Bollinger Band squeeze here, and this looks like it's firing that off to the downside. Momentum is measured by Stokes, lower highs trading down below 50. Rallies tend to fade when that occurs. Daily view. This was setting up very nicely for a rally. I wouldn't say it was canceled on Friday, but it was certainly put in jeopardy by the fact that we had a bearish reversal bar. We held support on Friday. Does it hold tomorrow? I doubt it. NVIDIA does not report earnings for a couple of weeks, but taking a look at the current performance of the NASDAQ 100, it's bounced back here a little bit. But I think that we're probably going to roll over here. We'll see. We'll see. This is not setting up well for tomorrow. Let's check back in with gold. Oh, and I want to go over the charts of, I didn't go over this, who benefits from the tariffs. I want to go over the charts of a few of the names that I think benefit. Gold coming back here a little bit. I'm going to be greedy because now I'm ticked that they're playing hardball with me. I want to get paid more. Okay. I wanted to go over this. I wanted to talk about the tariffs, who benefits and why. So the tariffs are going to benefit probably our industrial metal names, such as Alcoa. Now, let's face it, Alcoa is a dog. Most of these stocks are dogs due to the fact that you have the importation and dumping of cheap metals onto the U.S. market. The tariffs will help to resolve that. So Alcoa may just benefit from the tariffs. And you have a Bollinger Band squeeze here on are we on a monthly chart? Yeah, we're on a monthly chart. We already have higher lows getting put in. And believe me, I'm purposely trying to make the bull case. Am I enchanted with this chart? No. But we are at support. We are putting in higher lows. We are putting in higher highs. So when we look at this, we have to say or conclude that we have little downside risk and we have a lot of potential upside risk on Alcoa. Also, you have an inverted head, and this is a stretch. I'll acknowledge this. This is a stretch. Inverted head and shoulders setup. Head, left shoulder, right shoulder. We break out above this upper band of resistance here and close there at around $46 a share. This is going up. Another name, we'll go over a couple of these that should do fairly well, is U.S. Steel. Let's clean all this off. U.S. Steel is in these are the automated trend lines, folks. This is the algorithm. I didn't draw them. Bullish key reversal bar. So for the month, I shouldn't say so far. The month is over. We closed just off the lows of the month. I think there's a very good chance that U.S. Steel, which is been beaten up because of dumping in our markets, looks as though this is getting ready to pop up higher. What did it do in response to the tariffs on Friday? Relative to the market, it outperformed. It closed up. Granted, it closed off the highs of the day, but this is a stock that's setting up very nicely. No Bollinger Band squeeze to speak of. Now, another name is Caterpillar, because with these tariffs, if we get industrial expansion here in the United States, meaning more manufacturing, guess who builds it out? Caterpillar. Now, I hate this chart. I would not go buying this on Monday morning. We'll revisit it from time to time. It looks as though it wants to go down, but Caterpillar may benefit. Another one in the same area, John Deere, which is doing much better than Caterpillar. Nice uptrend going on. Daily view. We are stuck right at resistance levels. I want to know if we break through this upper band of resistance on John Deere or Deere and Company. That would be an interesting entry point. Nucor is another one. This is a steel play. I prefer U.S. Steel to Nucor. Another play would be STLD, Steel Dynamics. I prefer U.S. Steel to Steel Dynamics. CENX, an aluminum play. I prefer Alcoa, I think. They're both about the same. And that's it. TF Adam, thank you very much. Thank you very much. Oh, we have a spammer. Block. You're welcome, Jody. Tim, if I didn't say it, you're welcome. Sean, if I didn't say it, you're welcome. Mohammed, okay. If you want stock chart requests, you got to join the forum. There's a link above, and we'll go over them. We're over on time. Folks, everybody have a profitable trading week, please. Thank you for being here. Like, subscribe. You know the deal. Thank you very much. It's my honor every Sunday night, and I will talk to you soon.